Hello and welcome to the Educators Going Global podcast. Our guest today is financial advisor and accountant, Dr. Stephen Boush. Stephen joined the Investment Center in 2005, and since then, he's been providing financial advisory services for clients around the world. Focused on retirement planning and client education, Dr. Boush brings a broad wealth of knowledge to bear for his clients with a goal of education as well as portfolio growth. In addition to providing investment services, he holds the status of enrolled agent with the IRS for U.S. tax filing services for American expats living abroad. Stephen is licensed to provide services in a variety of financial areas. Having lived abroad for most of his life and now located in East Asia, Stephen has a unique understanding of the financial needs facing the expatriate community and is able to assist nationals of any country to find the best blend of investments and assets to help attain their savings and financial goals, as well as addressing the unique tax issues faced by U.S. expats who live abroad. We covered 3 areas of finances in this episode: salary and benefits, taxes, and retirement planning. This episode was recorded on September 8, 2022.
Hello, Stephen. Welcome to Educators Going Global.
Hello, great to be here. Thanks for the invite.
So where are you in the world?
Well, at the moment, I'm in South Korea, Seoul, the heart of the beast, as it were. So based from here, but end up traveling around through the region pretty extensively for the company and for what we provide services-wise.
Okay, so a real world traveler. How long have you been there?
Korea's about 15 years, actually. It's been a long haul. Usually the second question that follows up is people say, oh, you must speak Korean really well. And the answer is no, unfortunately, I don't. So it becomes quite an embarrassment nowadays to say how long I've actually been here and don't speak the language, but the travel is what takes me away. And so I don't really get that concentrated time to really learn it. So that's something that I wish I'd done more of, but unfortunately hasn't happened.
Well, I've heard that Seoul is a pretty exciting city, so I'm hoping that you're enjoying it.
No, Seoul's great. I mean, if you want a city that, it's always going, something's always happening, it's very safe, very metropolitan. It's really, and everything just kind of works. The subway works, the internet works, everything just kind of works. So it's a great place if you kind of want to have that experience. I highly recommend it.
Great. We would love to hear, if you have one, a going global story.
Sure. My situation is probably a little bit unique than maybe some of your other guests because I was actually born and raised overseas and didn't sort of expatriate. I kind of was always an expatriate, but I grew up in a country called Papua New Guinea, which is an island just north of Australia. The island is very unique in terms of its structure. It's got half of the island belongs to Papua New Guinea. The other half belongs to Indonesia. It used to be called Irian Jaya, now West Papua. But on the New Guinea half of the island, they have 700 distinct languages that are there. So It's a very, very diverse region. And where we were living, they had this particular language, but the interesting thing about the story was really a cross-cultural one in terms of looking at cross-cultural cues because, we were having we were in the village context and someone was having a big feast and there was a pig that they had been getting ready to kill for the feast. And in the context of that, the question was, we were just discussing how much was the cost of the pig for translation or for currency exchange here. Well, let's say it was equivalent of $20 for the pig. And so we were having this discussion. My father was actually having this discussion with them and saying, oh, it's interesting. Okay, that's a $20 pig. Is there such a thing as a $30 pig? And of course they go, yes, of course there's a $30 pig. And so, well, how high does this go? Right. So he continued to go up and is there a $40 pig? Is there a $50 pig? At one point he goes, is there a $100 pig? And oh, yes, absolutely. Do you want one? And my father, being from the U.S., his face gave the typical expression of eyebrows raised, kind of open face of, oh, no, and a very surprised kind of approach. And that was the end of the discussion. But a few days later, we had some people from the village come over quite upset. And their whole discussion was, why are you buying a pig from them for $100? Why didn't you buy the pig from us? And my father was like,
Uh-huh.
no, I'm not buying a pig. Well, it turns out culturally, the raising of the eyebrows like that is the sign of yes. So he was saying, yes, I want to buy a $100 pig with the eyebrows going up. And so the story was always, kind of the tongue-in-cheek part of it always. He's just thankful that they didn't ask if he wanted a second wife and the
Oh,
outcome that would have come from that. So, yeah, I mean, there's all sorts of contexts like that, but that's probably one of my favorite ones, just dealing with all of that and things you don't even know to look out for. Yeah.
oh my
Would he
gosh.
have gotten the $100 wife, hopefully?
Yeah. It's a good question. Not sure on that one at all.
Oh, well, thank you for that. That was fun. I'm envious that you grew up in Papua. That's very cool.
Yeah.
So, our guiding question for today's show is, how can international educators best set themselves up for financial success? And I'm really glad that we have an expert here for this. David, how about you carry on with
Yeah.
the first
Yeah,
question?
I'll jump in. So that's our big, broad question. And our audience is veteran international educators, but it's also new folks who are coming onto the scene and have lots of questions about what does it mean to go overseas? How will it affect my finances? So let's break that down to a smaller question of what is the biggest piece of financial advice that you would offer educators who are thinking of coming overseas to work in another country?
Yeah, I mean, there's obviously, a lot of pieces to making a move like that in terms of, getting set up and whether you buy a car when you're there and all sorts of sort of general operational type questions that are there. But the biggest thing I think I would probably say to people is that when you expatriate from your home country, there's a lot of things that naturally were sort of done for you. Meaning, if you're living in the US and working in the US and you're part of a school district, for example, you're being paid on the W 2, your employer's withholding money, sending it off to Social Security. So you're building credits in that system. Generally speaking, there's some type of retirement plan that you're participating in as well. So things are kind of being done automatically from your payroll, and those savings and retirement planning and social insurances and future Medicare, et cetera, all sort of being taken care of for you. But when you go overseas to these other countries, suddenly that all goes away. And really, it's on you to take on that ownership of all of those pieces. So rather than it being a case of, you just show up and the school kind of does everything for you, a lot of times with the financial things, you pretty much, you get your salary and you get your benefits, and then that's it. And really from there, it's up to you to take the steps necessary to, what are you going to do for retirement? How are you planning for the future? The longer you're overseas, how are you preparing for future Medicare needs or things of that nature? And so it shifts the responsibility away from it being done for you to something that the teacher would need to take on themselves. And I think that's where the biggest piece of advice I think I would say is take that on, embrace that, learn about it, understand what the pros and the cons and whatever other things are. And then from there, work out what is the best solution, either by research on their own, contacting those that are in the field who provide those services, but really looking at that and saying, I need to be taking more ownership in all of those financial things, whereas before I didn't really have to do as much. This is really going to become more essential.
That's excellent advice. That's a huge one.
Yeah, it's kind of working backwards. It seems to me we use in the curriculum field something called understanding by design, where you put your standards, your goals, what you want to have for the outcomes for your students' learning. Then you work backwards. What are the steps in the instruction to get there? So, what I'm hearing from you is you come up with what is our retirement going to look like or later in life going to look like? And then we are in charge of putting those steps together and getting there. So, that's a very clear message.
Hmm.
Yeah, I mean, to add to that as a corollary, I think even for generally with retirement planning in general, that's really what you have to do, because ultimately it's not so much how much you're saving and what you're doing along the way. Really, the big penultimate question is, will I have enough money to live on when I'm no longer working? So to answer that question, you really need to know and project into the future, how much will you need to live on when you're no longer working, and then work backwards to know I'm going to have to save X amount over X amount of time to get to that end result. So yeah, there's very much a forward projecting and then kind of working backwards to that as the goal, as you described.
It's like that commercial I've seen. What's your number? That's really, really important. I think that's excellent advice. Along those lines, what should potential hires look for in terms of a financial package that a school might offer?
Yeah, so I think that's a question that varies a little bit by the age and the status or the family situation of the teacher, right? I mean, younger teachers are going to have one set of, I think, activities. Couples would have another, families would have another. And really, depending on where they're at in that spectrum, things would be more important than another. Some schools that we work with, they're really intentional about hiring families. They want that family dynamic. They like the stability it brings. Others are very much, we want the young teachers, we want the energy that they bring, so it does vary a little bit. But really, I mean, the things you need to be looking for is something that is comprehensive and useful. And the big things typically, I mean, the first ones I recommend that you look for is what is the medical insurance policy that you have at your school? Ultimately, there's a lot of insurance policies out there, and by and large, most of the schools will provide them, but they vary very wildly in terms of the quality and comprehensiveness of them. Now, obviously, a 22-year-old teacher who's going out there is going to live forever, probably not a big deal. They're not concerned about the medical. But as you have family and kids and older ages, et cetera, then that becomes a really key component in understanding where you're going to be covered and what you're covered for. And we've had a lot of stories over the years of schools that offer insurances that are probably fine for the domestic environment, but for an expat who's coming in and then going back out again, not comprehensive enough. Thailand's a great example for this. A lot of the schools there offer a medical insurance policy, but the cap on the policy is typically $25,000. That's the maximum of coverage it would be. And at a Thai hospital, that should pretty much cover most treatment that you would have. But as an expat, if you don't speak Thai, you're not going to want to go to a Thai hospital. You're going to want to go to one of the international hospitals where the same procedure is going to cost 4, 5, 6 times as much. And so really making sure that you're knowing the medical side of it, because that's something that can really financially cripple you or put you in a situation where you really can't get the care you need. So that's, I think, item number one I would look for is a medical insurance. How do they handle that piece of it? A lot of schools will also include life insurance and disability insurances, and to some extent, those are great to have. But generally speaking, they don't have a lot of recruiting power. When schools are recruiting teachers, having a life insurance policy doesn't necessarily have a big draw unless someone's simply comparing one set of benefits with another. So a lot of schools don't offer those types of things. I'm not so concerned about that. I think if you need life insurance, you should get it for your family independently of your employer anyway. So you've got that with you as you go through. So if you've got that need, you would go ahead and get that. So that would be part one and part two. And part three really is, I think, the salary itself and looking at it in the context of the country that you're living in. So the salary number can be all over the place. In fact, a lot of cases we see schools that pay the salary in a net terms, meaning they cover the taxes on that salary as well. So the person has a very fixed amount of income they're going to receive, which is great. But the salary itself is really irrelevant unless you know the cost of living in the country that you're going to be at. Mm-hmm. So you can have a nice salary, but if it's too expensive to really live because of the environment, you've got to keep that in mind. So really the number itself shouldn't be the be all end all, but really how far can it go? And one of the metrics I like people to look at is what is the savings potential of that school? So when you're doing an interview, here's the salary. The question I would be asking would be, how much can I save? How much does your average teacher save in a given year of that amount? Because really at the end of the day, that's the amount of money that's going to help you build for your future, make sure you've got, disposable income to do what you want to do, traveling around, saving for future, that kind of stuff. So the financial piece, kind of looking at it more holistically, keeping those two elements in mind. And those would be kind of the three main things is the salary in context, and then the other two sort of benefits that come alongside that can kind of be there. A lot of schools don't provide individual itemized benefits. They just simply give sort of a lump sum and here's what you need to be shooting for, which is fine as well. Just knowing, what's included in that package and what are you expected to pay. The other one too, just to check, and this is kind of tied to the idea of being aware of the local circumstances, just how local taxes are handled. Sometimes you have to pay them. Sometimes the employer will pay them. Sometimes there's tax treaties where you don't have to pay for a couple of years and then you start paying after that. So the tax piece of that can also eat away at that. And really just having, again, a clear understanding of this is what I would be getting into and here's what I'm going to take home at the end of the day. I think that really helps to kind of have the full picture there going into something like that.
Wow, that's very helpful. And from a financial advisor point of view, all that makes so much sense. And I think what we can add, Audrey, are a little bit more on the ground things for people to think about. One is housing and what are the costs there? Do you want to live in a reasonable place or do you want to spend more money than what is given to you? And then another one is transportation. Is it a city like you're going to Seoul where you have a strong metro system, or do you need to buy a car or a scooter? So there are a couple more things that aren't so much a part of the package. The housing is, but it's just one more parameter to think about and how you're going to be able to afford and save some money in your new location. So one of the things that's happening in the last several years is a lot of international educators are starting side gigs. So there's always been the tutoring that people do, but now folks are able to do consulting, offer specialized classes online. So they're earning money while they're overseas. And there are a couple angles there. One is whether your school will allow you to do that. There are some cases I've heard where the schools don't want you earning money on the side. But if you are earning money on the side, and coming from an American perspective, how has that come into play with taxation for coming back, paying your U.S. taxes?
You're right. I mean, there's a lot of that happening. And in some ways, it's actually very important for an expat abroad to look at that as part of their planning because, and this gets a little bit into the tax side of things, when you come overseas and you're working for a foreign employer, you're not paying into Social Security or Medicare any longer, right? A foreign employer doesn't do that. Now, there are a handful of schools out there where you are paid on a W-2. They are, in fact, participating in the system, and you're able to still kind of keep the similar kind of structure as you had back home. But by and large, most of the foreign schools, you're working for a foreign employer where that wouldn't actually be the case. And in that scenario, then you are not accruing time in the system. Now, if you've already had, 10 years of work in the US and you've qualified for Medicare and you're on your way with Social Security, then this overseas jaunt really isn't a problem. But for those who sort of came over early and have been overseas for 20, 30 years, if they haven't been paying into the system, potentially they could be not eligible for Medicare when they came time to retire. And so one of the things that happens is that the self-employed income is really, as an expat abroad, one of the few ways you can actually pay into Social Security while you're still working overseas for a foreign employer. And so what happens really, it's approximately every $1,600 or so at the moment gives you one credit towards Social Security. So if someone came abroad and they did tutoring for $3,500, they would report that as self-employed income. It wouldn't affect the overseas exclusion status. They'd still have the same foreign income exclusion on that. They would, however, have to pay the self-employment tax of 15.3%. But what that would give them is 2 credits towards Medicare. And so ultimately, they would need to have a total of 40 credits to be eligible. And so over time, if you are going to be an expat abroad, especially for an extended period of time, and you haven't been eligible for those things, I do think that doing the tutoring or something on the side to be able to continue to have that income, not really so much for the income, but so that it's preparing again for the future, that you're well set up for when you retire, you go back, and you're not forced to at some point, after you've been overseas for 20 years, all of a sudden you got to go back to the US and do your last 10 years of work there because you haven't qualified for some of these things. So it is something that I think is beneficial. Some people, it might be more important than for others, especially for the longer term expats. It really is something you need to look at. But yeah, your comment was correct earlier. I mean, a lot of the issue is, schools don't permit it or the visa that they're on doesn't permit it. So it becomes a little bit trickier, but it is something where I think more and more, if you're going to be a long-term expat, you need to be looking for a way to kind of augment your income via that
So
methodology.
this dovetails right into what you were saying earlier, that you're landing your first time overseas and you're just not aware of all this. And the whole idea to be like maybe a 24-year-old, that they just have to be cognizant. They have got to figure out a way to pay, if you're an American, into our Social Security and Medicare system. So this is pretty huge. I'm so glad you brought it up.
Yeah.
Yeah, I mean, generally speaking, I mean, the way Social Security is done is Social Security is going to be, it's based on your top 35 highest earning years, right? That's the calculation that goes into play. So if someone's earning, $3,500 a year in tutoring or other income, it's not going to create a huge pension stream in terms of the actual compensation amount if they're overseas for those 35 years. But the real thing for Americans overseas is that obviously without having a national health system, if you don't have something in place for how to get the Medicare coverage in the time you reach 65, 67, what have you, that's really the problem. There's no private medical insurance you could then buy, or if you could buy it, the cost would just be exponentially too high. So that's where I think the key element is really the medical side to make sure you're being protected from that going
Yeah,
forward.
that's very good to know, especially for people just starting out, but also for people perhaps a little further along the line who didn't know about that. So I think primarily you advise Americans. I know you have indicated in your bio that you work with other nationalities. It'd be helpful if you could share a little more deeply. You mentioned the foreign exclusion. If maybe you could go into a little more specifics on that, particularly the first year when you leave the US, and then maybe when you repatriate, how to shelter your overseas income, or and then maybe if you have any other insights on other nationalities, anything you could share along those lines would be helpful.
Sure. Yeah. So, I mean, without getting into, too much IRS speak, which, it's probably too much for anybody at the moment anyway to try and get into. But the idea here is that the U.S. government basically says that if you qualify as an overseas resident, that they're going to give you some relief of taxation. The U.S. is one of the few countries in the world, there's probably 3 or 4, who tax their citizens on worldwide income. The vast majority of countries, when you leave and you become non-resident, the country no longer taxes you. They wait until you return and come back and take up residency again, at which point then you would be taxed. But the vast majority of countries do it that way and makes it very simple. You just simply stop filing, you stop reporting until you become a resident again. The US says, no, we tax you on your worldwide income. You must report all your income from any source anywhere in the world every year. But in terms of their being a little bit more kind and generous, they say, well, we understand you're not living here, you're not working here. Therefore, we're going to give you an allowance for money you can make abroad if you qualify as an overseas resident. And there's a few different tests that can be done with that. Without getting too detailed, there's what's called the physical presence test and the bona fide residency test. And the physical presence test is typically used for someone who's temporarily abroad. So imagine someone who, I'm not sure, let's say you took a leave of absence from your employment in the US, you've got a 1 year off, that you want to go do something for a year and you're going to come back to your job again in the US. You're not moving overseas. This is just sort of a sabbatical year where you want to go take and travel or go and work somewhere abroad for a little time. It's designed for that kind of idea that you're not really shifting your tax home anywhere. It's just a temporary visit. So there's limitations on how much time you can be in the US under that test. The bona fide residency test is designed for someone who's moved overseas with no intent to return back. Their house, they've rented it out, they've quit their job, they're not on a leave of absence, they've moved overseas, and whether they're going to stay in the first country they go to or they're going to move around for, the next 20 years doesn't really matter. But at the time of their going, is their intent to be abroad indefinitely? And if the answer is yes, then this bona fide status would apply to them. And of course, there's some things you have to do, forms to file, etc., which we can help with doing all of that to get you to those levels. But the concept there is basically that you have to first qualify. The amount that you can exempt from taxation in the US varies year by year. It goes up a little bit because it's linked to inflation. For 2022, for example, the limit is $112,000. So if you go overseas and you meet this test, then the first $112,000 that you make in income would not be subject to US taxation. So it becomes sort of this idea of trying to really maximize your circumstance so that you can qualify for these tests, and therefore really not only are you getting perhaps a higher salary than you might be getting back home, extra benefits than you might be receiving, but also the tax piece of it also kind of adds to the overall benefit of going overseas by getting this tax relief that's available to you for that. There's a lot of nuances, though. So like the first year when someone moves overseas, they have half a year of income in the US and half a year of income overseas. And the IRS basically says, okay, great, we're going to add those two things together, and that's going to determine your tax bracket. And then even though you may strip out the foreign income that's not then taxable there anymore, the tax bracket that your combined income puts you in doesn't change. So your first year overseas, you may find that you're going to owe more money because the income tax bracket that your foreign income pushes you into results in your US income being taxed at a higher rate. So both the year you expatriate and the year you return, there are some nuances to kind of looking at how you have to plan that. And there's not a whole lot you can do to avoid it. It's more just a case of being able to prepare and know that it's coming so that you've got a little bit of money on the side to actually do that.
This sounds like another opportunity for folks to just reach out to people like yourself to get some coaching on how to especially handle that first year.
Yeah, absolutely.
Yeah, and I think a lot of people, they maybe have a US preparer already that they work with, which is always great. But one of the things I always advise is before they decide to use them is just to ask them how much experience they have with the overseas piece, because the rules are significantly different. And if the person is a US-based preparer that really doesn't file foreign returns, it can end up in a lot of hassle, a lot of headache with regard to that. So just making sure you're having those discussions with whoever you're using as your advisor on that, and making sure that they understand the nuances of the overseas side of things and how different it really is.
Yeah, absolutely. I just wanted to touch back on, you had mentioned that in some countries, I'm Canadian. So for me, I was in I've left the country after a couple of years. I no longer was filing Canadian, et cetera. But do you have any other insights for non-Americans that you might want to bring out now?
Yeah, I mean, but the tax picture for non-Americans, generally speaking, is, you just have to make sure that you are non-resident in your home country, that you've done whatever steps your home country requires you to do. And then from there, it becomes pretty simple. The downside of some of that, though, is that, you lose eligibility for certain vehicles for retirement and planning that you might otherwise have been using. So, speaking of Canada specifically, once you take on that non-resident status, everything's quite simple tax-wise. But now your accounts like your RSPs and your RRSPs, et cetera, your retirement vehicles, you really lose access to, because now they're saying, look, you're non-resident. We're okay with that, but you don't get to be participating in the rest of the system either. And so there's kind of the pro and the con of that. So really just whatever country someone's coming from is just to make sure they understand the rules of what it takes to be non-resident there, and that they don't accidentally keep themselves as resident when they shouldn't be along those lines.
Okay.
That makes sense. All right, so let's move into retirement benefits that Audrey and I, we've been in a lot of different schools, and there's a full spectrum of some that offer pretty great retirement benefits that one could do to schools that just don't offer them. And so that's something that, as you started us off with, one needs to be managing their nest egg and planning for the future. And now we've really picked up from you, if you're an American, to find ways to pay into the Social Security system and Medicare and such. So, what advice do you have for saving for retirement?
Yeah, it's a good point. And I think it all ties really back to the tax situation that we've kind of touched on a few times earlier in this podcast of looking at that. Because as I talked about earlier, this overseas income exclusion, and to kind of illustrate it maybe with an example, if someone's making $80,000 and they file that, they have to report that as income, and then they claim the overseas exclusion. So they then zero that out by claiming that on the return. And then as a result, you're showing that you earned 80,000, you exempted 80,000, you have zero taxable income remaining. That's great, right? No tax. But the IRS then says, wait a minute, on paper, you're essentially saying that you made no money, right? Because you're showing a zero income basis when you submit that document. And they say, okay, that's great. You made no money. But as a result of that, you now can no longer put into your traditional retirement vehicles. So much like I mentioned about the Canadians being restricted on what they can do, the US side of things also then becomes restricted. So a typical retirement vehicle you might do on your own would be an IRA or a Roth IRA. These would be individual retirement accounts. One is a pre-tax option, one is a post-tax option, but typically ways that people would save money in a tax-deferred environment. The problem is those all go away when you're claiming that overseas status. So again, it's one of those cases where if you talk to your financial advisor and say, can I put into a Roth IRA? Most likely they're going to say, sure, go for it. But in the context of the international side, actually you cannot if you're filing that way. So one of the things you have to look at is really, instead of segregating your retirement investment planning from the tax planning and go to two different parties for that, really they're overlapping tremendously. One impacts the other. And so when you're looking at a tax plan for someone, you're also looking at the retirement and vice versa. So knowing those elements is going to be a key part of how that retirement works. But the vast majority of schools, well, it's kind of a pendulum, I would say, actually. When I started in this industry, most of the schools had a retirement element that was part of their package. And they had contracted with some entity, either our firm or another firm, whatever, to provide a retirement solution. So we would come to their campuses, we would help them set up whatever investment they want to do, and the school would then send the retirement money directly to us and not give it to the employee, kind of like a traditional US manner where that goes straight to the 403B or other plans. But then over time, there was a few financial issues globally, right? We had meltdowns in the markets and things of that nature. And so teachers generally kind of went, you know what? We don't like that you're forcing us to put the money into these other vehicles. Give us the cash. We'll take care of it on our own. And a lot of schools just kind of went, you know what? That's a great idea. We don't have to mess around with this. We're just going to go ahead and give you the money. And then it's your responsibility to take care of it. And they kind of said, okay, we walk away. They would still let firms like ours come on campus and meet with teachers if they needed help. Then that was fine. But from an administrative level, they kind of walked away. What we've seen in the last probably 4 or 5 years is the pendulum has kind of come back the other way because a lot of schools are realizing that when they gave the money to the teachers, it never went anywhere for retirement. It kind of went into the bank account. It kind of sat there. It got spent on a trip somewhere else or some fantastic experience. And then it never made it to retirement. So they had these teachers that had been overseas now for 10, 15, 20 years and had nothing saved whatsoever to be put for retirement. And so it was creating this thing where the teachers would then have to go back to the US, try and work in the school system for 20 years to finish up their time and get their pension. So then a lot of the employers now started going, wait a minute, we probably didn't do the right thing by giving them the money. We need to kind of come up with another solution to kind of move it back where that money goes to something for retirement. We know that it got there. We made sure that it got there. And that's kind of our fiduciary responsibility as an employer to make sure that happened. So there's a big spectrum that still exists out there, but the pendulum has swung. So a lot of the bigger schools that are well resourced are looking at this issue and saying, you know, we need to help our teachers save for retirement. But there's a lot of them out there still who just kind of say, you know what, that's not our problem. You're adults. You deal with it on your own. And the highly transitory nature of teachers, of being at one school for maybe 2, 3, 4 years before moving on, means that the employer doesn't really have to take any responsibility for what happens at the end of the day, because that teacher will be at another school somewhere else when they finally make that decision about retirement. So something we try to do is to educate employers of the benefit of this and how it helps to retain their employees long term by having these packages in place and really looking at the retirement elements. But it is something that is a very broad range out there in terms of what's available. And that goes back to my earlier comment of this is where you have to take a lot of personal responsibility of making sure if your employer doesn't do something that makes it easy, that you're on top of it and that you're making sure you are doing something either way.
That's a lot to consider. What about 401k plans? Can they be beneficial to international educators? How can they access those?
Yeah, I mean, 401k plans are a very common investment vehicle in the US side, right? It's something that many places know about. Usually, just from an overview perspective, a 401k is used for typically what's called a for profit organization. A nonprofit would typically use what's called a 403b. Structurally, they're very, very similar. So conceptually, they're kind of be treated the same in terms of employer provided retirement account. And so a few years ago, well, this is probably 5 or 6 years ago now, there was probably a handful of schools, two or three, maybe four schools around the world that offered these retirement plans to their employees. And they were schools that really had a large proportion of American employees there because a 401k plan is limited to US nationals, and they offered these plans. But what's happened is, starting in 2014, there was some legislation called FACTA, FACTA. And what this was, it was the US government's attempt to know more information about what Americans are doing overseas, whether that be bank accounts, investment accounts, a lot of things along those lines. And they kind of used a big stick to say to these foreign financial institutions, you need to report back to us if you have Americans in your institution, and we need to know how much money they have in these various accounts. And so if you don't report that back to us and you have any assets in the US, we're going to take 30% of those as a tax so that you will be compliant.
Huh.
So what it did was it shifted the landscape tremendously, where a lot of firms who were operating in the international sector kind of pulled out. And so over the years, a lot of them said, we don't want to work with foreigners overseas anymore. So even right now, for example, Vanguard, who's one of the large fund companies in the US, if you go to, they will not work with you if you live abroad. They basically say, even you're an American citizen, doesn't matter, you live overseas, they don't want to get involved in what that entails. So a lot of financial institutions pulled out of the international marketplace and said, we can't deal with this legislation and still do our business. So it kind of created this vacuum of how do we go about really filling this need, as opposed to doing just individual cases. So we came up with a way to affirm, and we work with a partnership to create the 401k plan that can operate internationally for non-US entities, specifically for Americans. And the idea was for us is to create enough of a network of schools that basically we felt like if we could get enough schools on board, someone could kind of have a pension plan that would carry with them around the globe. So normally what would happen right now is if you went to one school, so let's say you went to a school in Portugal, and they would have one sort of benefit package, and you would do that while you were there. And then you went from Portugal over to Jakarta, and you were in Jakarta, they would have a different package, and the two would not be compatible, right? So you couldn't move the money from your Portugal one over to your Jakarta one because they're two different things, and the rules might be very different on what you can do. So now you have two different things. And then you move from Jakarta to Singapore, and Singapore does a third thing. And so you had these poor teachers that had 4 or 5 accounts spread out in different countries. And when we'd have meetings with them, a lot of the discussion was about, I have this account, but I don't remember what it is or where to get to it. I've got some money in there. I don't know exactly what it is. And they weren't keeping track of these accounts. And so it became kind of problematic. So our goal was to get enough schools kind of doing a 401k where they could go from Singapore to Jakarta to Japan to Korea to Kenya to South Africa and still be part of a 401k plan. And so we've had a big push to do that. And it's been very successful. I think right now we operate plans at probably 40 or 50 international schools globally. We're hoping more will come on board to be able to kind of do this. It's not a high cost to the school to do it, but they just have to be willing to withhold the money from the paycheck, send it over to be compliant with the 401k plan rules. 401ks are regulated by the U.S. Department of Labor, so there's kind of some strict procedures that have to be followed. But for schools that are really looking at following that pendulum swing and saying we need to do a good thing for our employees, the 401k is fantastic. The ultimate benefit of really circles back to the tax piece. As I mentioned earlier, if you're filing it under exempt status, you can't put into that Roth IRA or IRA. But if you're filing it and your employer offers you a 401k plan, you can put money into what's called a 401k Roth. And really what a Roth account is it's money that's never taxed again. So whatever you put into a Roth category, whatever it grows to during your career, whenever you take it out at retirement, you pay no tax on those gains. So it's completely a protected account. Well, if you think about it in the overseas context, if you're making that $80,000 that I mentioned earlier, and that's completely being exempted from tax, and your employer offers you a 401k plan where you can put money into the 401k Roth, and that's never taxed again, you've kind of created the perfect circumstance, right? Where your income is tax-free and your investment is tax-free.
Mm-hmm.
And that's really a very powerful thing to have that grow over your working career. So there are a lot of schools that offer it. We'd like to see more join and kind of build that network out more where it makes it easier for teachers to kind of be mobile and still take their retirement plan very seriously and keep the same plan going regardless of which country they go to. But absolutely, I think it's really one of the best tools out there for long-term retirement and tax-free savings as an expat.
I
Wow.
tell you, Steve, you were just dropping huge bombs of incredible information here. Because if folks look at their Roth here in the US, if I've got this correct, one pays your taxes on that first, and then it goes into your retirement, you take it out and you aren't going to be taxed. So the whole idea that you can take money that you're earning overseas that's less than the exempt, and then you could put it into a Roth that then won't be taxed when you retire, that is huge.
Yeah, no, the differences are stark because, a personal Roth IRA, you're limited to $6,000 a year if you're under age 50 or 7 if you're over 50. But a 401k Roth, your limit is 20,500 under 50 and 27,000 if you're over 50. So
Wow.
you can put a lot of money if you're in a situation where you're able to save a lot of your salary, you can get a lot of money into that umbrella where it's protected. And so, whatever happens with the tax code in the future, we don't know, but money that's in that 401k Roth wrapper is tax-free forever. And that builds in such a powerful way long term.
Can we just cycle back for just a second? The 401k Roth is a very interesting concept for me. You mentioned Vanguard specifically and that they won't work with people who are overseas. I just was a little confused about that. You just mean specifically their retirement funds. That's what you're referring to, right? Because you could still invest through Vanguard.
No. So if Vanguard doesn't know that you live overseas, then they really won't give you any trouble.
Okay.
But if you picked up the phone right today and called Vanguard and said, listen, I live in Abu Dhabi, I would like to open an account with you. And you tell them that you live in Abu Dhabi, they will not open any account for you
Ah,
whatsoever.
okay. Okay.
And most of the firms are like that in terms of Vanguard, Fidelity, the other big ones as well. So a lot of the self-managed platforms will not work with you if you live overseas. And it's not so much that they're policing it so actively, like they're trying to hunt people down that have them. I mean, if you have a Vanguard account before you leave the country and you've been investing in it and you keep your address in the US and what have you, you move overseas, they're not necessarily hunting you down and checking your IP address and are you logging in from abroad, that kind of a thing. But we have had cases, in fact, one happened just probably about 3 weeks ago where a client with Vanguard had locked themselves out of their account. And normally they'll get that text message that says, here's your
Mhm.
code to reactivate your account. They couldn't get the text message because they were overseas. And so they called up and said, listen, I live abroad. I can't get that text message. Can you give me access to my account another way? And the response was, oh, you live abroad, do you? I'm very sorry. You cannot have this account. You need to take action to move the
Oh
money to
my
another firm.
goodness.
You have 60 days to do it. So
Mm.
it's not about a legal or illegal issue because it's not a problem to have Vanguard funds. But Vanguard has said, look, under our compliance regulation, because of all the overseas complexities of being abroad, we just don't want to mess with it. And from their point of view, there's not enough people that live overseas for it to matter for them to kind of cut that piece of the business out. So ironically, it makes it tough for more people to get accounts, but it's been great for our firm because we do provide those services, right? So we've been able to step into a lot of those circumstances and provide people with the solutions that they need, even using index funds and other things. So we're able to customize a lot of that around it, but it is a tricky thing with a lot of those nowadays with being an expat and how those accounts would be handled.
Okay. Well, that's very good to know.
And it really pays to get that expertise, that
Absolutely.
consulting. It makes such a difference. So I did want to drill down a little bit, Stephen, on 403Bs. So before I went overseas, I worked in some independent private schools that used 403B as the retirement pension kind of vehicle. And the big dog has been TIAA, which was set up specifically for teachers and other people
Mhm.
working in nonprofits. But there are plenty of other companies that provide that. So, am I hearing from you that one avenue for the normal kind of setting up a retirement fund in international schools, they could hire TIA or another one of the providers? So that's the 403B. But they also go the extra step and work potentially with you or some other organization to have 401ks also? Can it work that way as well?
Well, normally an employer will only set up one plan for the
One
employer
plan.
side, right?
Okay.
So they would use either our 401k plan or another 403b plan or whatever would be the case. TIACREF is a great example, actually. They were in many schools abroad. And what they ended up doing was whether it was by fault or design, I don't know, but they ended up taking a lot of non-Americans into their plans. So what ended up happening was, this is probably about 10, 12 years ago now, they got caught doing that. And they had a lot of non-Americans in the TIAA-CREF plans from overseas sources, and basically went, "Oop, we got in trouble for this. We're done with the overseas business." And they pulled out of everything completely. So it's the same thing. It's the international piece is just complex there. But a 403B is used for a U.S. nonprofit. So unless the entity overseas is registered in the U.S. as a U.S. nonprofit, and there are a few schools that operate that way, they have a U.S. charter and they kind of structure under that way. They'll usually pay on a W-2 as well. Under that structure, they could set up a 403B, but it has to be a U.S. nonprofit entity that would offer that. So by and large, overseas, it's going to be the 401k
401k.
with
Okay.
very few exceptions. Yeah.
All right, thanks for that clarification. So let's look more, whether it's the end of the career or a couple or a single person or a family is moving back to the U.S., they're repatriating. And what can happen there is some of the schools do have, like my last school, it was a national law that said you've got to set aside a little bit of money every month, kind of as a bonus, kind of like a contract bonus, that you would get one lump sum. So you finishing year off, you're getting 6 months of salary, but then you're going to get this bonus. You're coming back to the US. How would you advise people to handle that, to try to shelter that income that they're bringing back to the US?
So there's a couple of strategies, because it is fairly common. A lot of countries, they term it sort of what we call a severance payment, right? It's sort of a contract completion bonus, or certain terminologies. It's kind of all relative to the same thing. Here in Korea, for example, for every year, and this is a national law, for every year that you work for your employer, 1 month of salary has to be set aside for you for when you ultimately leave. It can't be paid to you while you're there, but you kind of set it aside. And if you're there for 5 years, you would get 5 months of salary as you left the country. So there's two kind of ways to handle that. One of the ways that we would look at from a tax perspective is that if the money has been earmarked for the person, and it's really, even though they haven't received it, but it's sort of been put into an account for their name. So in Korea, for example, they have these accounts where the money gets set aside. So it's not kept with the employer, but it's kind of set aside separately, so it's protected. In those cases, we actually report that income on the tax return as we go. That way it doesn't build up this huge lump sum down the end that has to be then reported upon exit. Now, not all cases that can be done. It depends on really the nature of how that's doing. So we have to look at which country and how that's specifically being earmarked. But the other part of it is that the overseas exclusion allowance gets prorated based on the amount of time you're overseas. So if, for example, you finished up in the middle of the year in June, right in the middle of the year, and the exclusion allowance was, $100,000, you would get a $50,000 exemption, which really works out okay normally because your income is also halved. But if you have half a year of income, but then you have 5 extra months of salary that get added to that, suddenly you may be above that exclusion allowance for the year, and it would result in taxation on the U.S. side because you don't have enough allowance for that overseas piece to do it. So one of the strategies is to look at when you actually repatriate. So when you're done, for every day that you're overseas, you continue to have some more foreign income exclusion. So rather than school ending on May 31 and you're on a plane on June 1st, you may want to wait and actually travel back in mid-July or towards the end of July, so that you have more time overseas. Therefore, you have a larger foreign exclusion that you could apply against that income. And so really it becomes a little bit of a knowing how much you're going to get on the front end to be able to then kind of plan around that and then bring that in that way. But if it goes over the exclusion limit, there's not a whole lot that can be done. It's going to be taxable in the U.S. The only benefit too that comes as part of that, though, is that there is what's called a foreign tax credit as well. And if you are taxed on that same income in the foreign country, a portion of that, not all of it, but a portion of that can also be applied against your U.S. tax liability on the same income. So there's a few different mechanisms that can be applied to kind of mitigate that as much as possible, but it really requires kind of having those discussions up front before you get down the road and you've got this lump sum of money that suddenly you haven't planned for and then incorporated into it. So again, it's that same motif as we've kind of been alluding to, and that is, understand your situation and plan ahead so that you can kind of give some time to address those concerns as you go.
Oh, this is fantastic. So much information. We've got a lot to process here. We really appreciate this. Just to kind of start wrapping it up, is there anything else that you would like to speak to that you haven't had a chance to say yet?
No, I mean, I think the reason I work in the international setting and I love working with teachers and expats is because it's a dynamic thing and everybody's case is a little bit different. And so it's one of those things where we're expats ourselves, right? We all live overseas. Everybody in our firm lives abroad. We understand what it's like to be in those circumstances, and we're not sort of providing solutions based on, we're in the US, we fly overseas to help and fly back. I mean, this is our life as well. And so there's a lot of things that can be done. It's the same thing when you go to a new country. whether it's about financial things or just living, is just asking questions. Really just ask the questions. Go around and talk to different people, but make sure you're getting advice from reliable sources. Every year we do tax returns for people who haven't filed for the last 10 years.
Mm.
And it's because they talked to somebody at their school who said, "Oh, don't worry, you don't have to do that now that you're overseas." And they went, "Okay, great." And then for the next 10 years, they proceeded to do it until suddenly someone said, "No, that's not actually true." So it's asking a lot of questions to really understand the circumstances and kind of looking for reliable sources as part of that. I think that's really what makes you successful, not only on the financial side, but just in living in general in another country. It's just asking. There's a lot of things we can assume about our own understanding of a circumstance, only to find out, as in my earlier example of my father and the pig, that you don't really understand what's happening. And so if you're not sure, ask. And I think that's probably where I would say is the primary thing. We're here to be a resource if we can help do that. There's a lot of other places out there you can turn to, but really looking for that information, asking those questions proactively.
Did he ever buy the pig in the end?
He did not. No, there was no purchase of the
thankfully.
pig.
Okay.
We enjoyed the feast of the existing pig. We shared and participated in that, but we did not buy the $100 pig. No, we
You
did not.
managed to get out of that one. Okay, thankfully.
Exactly. Yeah, exactly.
Oh my. Well, speaking of asking questions of experts, that's the big takeaway, I think, of the show here is understand your situation, seek out expertise, as Stephen says, ask questions, but make sure those people know what they're talking about. So how can people contact you, if they have questions for you, potentially maybe there can be opportunities in the future where you can offer educational opportunities for folks. I know you came to my last school and spoke to us there. So how can people contact you?
Probably, I mean, the main sources are going to be online. I think our website, we have, as I mentioned earlier, we do insurance, we do investments, and we do taxes. And so because there are three very different elements, we actually have three different websites that kind of address each of those services. So probably the easiest one I would say, rather than giving you three different links and three different email addresses and having you deal with all of that kind of tracking, I would probably just give you the main tax email address, because a lot of what we're talking about here is really financial in nature. The website is very simple. It's TIETAX.com, so TIETAX.com. I'm not sure, as some seasoned educators would know, TIE, the International Educator, is a big teacher recruitment portal out there. So there's some connections with that entity as part of what our company operates under. But TIETAX.com is our website. You can find an email there for me, a contact page, whatever. You can email me directly. My email, which I think will be probably published somewhere, but stephen.boush@TIETAX.com, TIETAX.com. And yeah, we're happy to do no-cost consultations with people to kind of talk through them. Again, going back to the comment of planning ahead, one of the things that does happen in our practice is that really from mid-January on to mid-June, that's peak season for doing tax returns, and that's when everybody's coming and submitting their documents and what have you. So if you do have questions, getting in contact with us earlier on so that we can then, have those discussions before it gets too busy and crazy would be preferred. But we understand, circumstances, but do reach out and we're glad to have those discussions and support as possible, or point you in a direction that maybe you can get the help if we can't provide it for you.
Well, Stephen, I think everyone's reaching for their laptop right now to email you. So as we record this, it's August. I'm not quite sure when we're going to release it, but I hope you get all your questions in the, fall quarter, if you will. And I'm sure that you will hear from a lot of people as a result of this really very, very informative presentation. And thank you so much for joining us here today.
Yeah, my pleasure. It's something I'm very passionate about. I think you can probably tell from my dialogue on it. But yeah, it's something I enjoy and something I like sharing and getting the information out there. So yeah, please don't hesitate. If I can help, do reach out.
Well, thank you again.
Thank you for joining us today on Educators Going Global.
You can find this podcast on Apple Podcasts, Spotify, Google Podcasts, and all of the other usual suspects.
Please subscribe, like us, and leave a review on Apple and Spotify, and let your teaching friends know about us so we can grow our community.
Please reach out at educatorsgoingglobal@gmail.com and join our Facebook group, Educators Going Global, if you have ideas, comments, or wish to share a Going Global story of your own.
You can also find us on Instagram at Educators Going Global.
Please visit our website as well, www.educatorsgoingglobal.com. All our podcast episodes are on there by topic, along with blog posts, Going Global stories, and our ever-growing resource library. For now, this is Audrey
And David.
inviting you to travel,
Teach.
and connect with us.